Good morning and welcome to the ADS Securities Markets Update. During the Asian session today, eyes were on Japan fundamentals in addition to the Bank of Japan monetary policy statement, which came in as expected. The bank left the current QE purchases or QE program unchanged at 80 trillion yen annually. However, one of the members voted in favor to cut the purchases again back to 45 trillion yen, which was basically back in October. Moreover, the Bank of Japan revised the inflation estimate, especially for the core CPI, to be about 0%. For the upcoming or for the time being. As a result, the Japanese yen advanced slightly across the board, while the dollar yen again eased back toward to as low as 1980 right after the decision. In the meantime, for those who are interested in the US dollar trade, I would prefer to wait for the FOMC meeting minutes today. However, longs are preferred to be between 1958 and 1938, where buyers are likely to appear. However, stops for such trade should be placed well below Friday's lows, which is basically around 1872 for now. During the session, also one economic figures was released for Japan also, which basically was the current account surplus. The surplus eased significantly lower, went back significantly lower towards 0.60 trillion yen in February, down from 1.06 trillion yen in January of this year, which basically is the lowest surplus since September of last year. As for the European session ahead, there are also few economic releases across the session, which may lead to a tight range ahead of the FOMC meeting minutes later tonight. In Germany, the factory orders is expected to rise again by 1.5% in February, which would be the biggest monthly increase since December of last year, after declining by 3.9% in January of this year. The French trade balance deficit also is expected to widen further toward 3.8 billion euros in February compared to 3.7 billion in January, which would be also the biggest deficit since October of last year. In Switzerland, the month-over-month CPI is expected to rise by 0.1% for the month of March, compared to a decline of 0.3% in February. However, this would be the first monthly increase the first monthly increase since September of last year. Finally, in the Eurozone, the retail sales is expected to decline again by 0.1%, which would be the first monthly decline after 5 months of consecutive increase. As for the US session today, there is no fundamentals from the US, while we will be watching only the US crude oil inventories in addition to the FOMC meeting minutes. But beginning with the US crude oil inventories is expected to rise again by 3.3 million last week compared to 4.8 million the week before. All eyes today are on the FOMC meeting minutes, which we believe again that it might be a non-event, as we need to see what's the Federal Reserve's input about the recent economic slowing down, especially after the US jobs report came in far away from the market estimates. The Federal Reserve input won't be in this meeting minutes, therefore the market may not react well to or may not react with the current statement, especially if the Federal Reserve statement shows no big changes than what was released during the FOMC decision a few weeks ago. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.